Does your term insurance refund you all of the premiums that you pay over the life of the policy when it matures? Sounds too good to be true. This is a real thing, but the math is what should drive your decision. I've got that and more coming up. Most people have a temporary need for life insurance. You need life insurance for a certain season of your life, and after that, you're self-insured. This means the life insurance need, if it's temporary, it should be term. Term is temporary life insurance. Take me, for example. Cindy and I were married. We've got 3 young kids. They're all dependent on us right now, financially dependent and on the payroll. We've got, college we're saving up for. We're saving up for retirement. We've got a house and mortgage and all that sort of stuff. And so right now, we need life insurance. If something happened to one of us emotionally, it would just be awful and devastating. Financially, though, there are some needs. There are some unfunded goals right now. However, fast forward a little bit. When the kids are out of the house and financially they're on their own, when they're out of college and that goal is behind us, when we've saved up more for retirement, maybe when the mortgage is paid off, the need for life insurance at that time you could argue is probably none, right? Emotionally, yes, it'd still be just awful. But financially, when the kids are out of the house, when college is paid for, when we've saved up what we need for retirement, when there's no more debt, you could argue, yeah, we're self-insured and we wouldn't need life insurance. Therefore, we need life insurance for a season, but not for our entire lives, just in this scenario. And if that's you, you have a temporary insurance need and you need temporary insurance, and that's term. Term life insurance is you're renting your policy. You are renting it. I need term insurance. I need life insurance for 20 years or for 30 years or for 10 years, whatever the length is. And then like when you rent an apartment, well, you pay for it while you need it. And then when, the lease is up, when that term is up, you stop paying for it. You don't take anything with you. You don't get to keep the apartment. You don't get to get your money back from the term insurance. You had it while you needed it. And listen, if you're still alive at the end of the term, you won, right? You won. But what if you could get all your money back? What if at the end of the term, yeah, you won, you're still alive, but all the premiums that you paid along the way, you get back, you get refunded back to you. Sounds too good to be true. It's actually a feature of term insurance. Most term insurance doesn't work like this, but you can add a feature called return of premium term insurance. Truth be told, I have 3 life insurance policies. Got one right when we got married, got another one when we started having kids, got another one later in life as we got more mature. And one of my policies, the first one, I did the math, return of premium was the right way to go. The other 2, I did not do return of premium. And this wasn't an emotional decision. It was all about the math. So let's dive into it, okay? If, let's say, you needed $1 million of life insurance for 20 years, if that was the right fit for your comprehensive financial plan, $1 million for 20 years, and you're healthy, and therefore you're able to get that life insurance, that term insurance for $1,000 a year. Fantastic. Over those 20 years, $1,000 a year, you're going to pay 20 grand. And like I said, if you're renting the policy, like normal term insurance, at the end of the 20 years, you're still alive, you won, but you don't get any of that 20 grand back. Say, for example, you said, no, I heard about this return of premium thing, and I'd like to do that. And what if the return of premium was 3 grand a year instead of 1? You might say, oh, I don't like that. No way, I'm not doing that. But hang on a second. If you did 3 grand a year, then over those 20 years, you paid 60 grand. And at the end of the 20 years, you get 60 grand back. Now, how does that sound, right? You might say, oh, well, geez, I'd love to get 60 grand back. That sounds great. Now, the difference between just going with term in this example and the return of premium, you're paying an extra 2 grand a year, right? Instead of 1,000, you're paying 3 grand a year. So 2 grand a year over 20 years, you're paying an extra 40 grand over the life of that policy, and that 40 grand is going to mean you're going to get 60 grand back. That 40 grand is not paid all up front, so it's an extra 2 grand a year. So doing the math, that's about a 4% internal or average rate of return on an annualized basis, a 4% return. Not terrible, but not great, right? Not terrible, but not great. This is why you've got to do the math and strip the emotions out of it, because you might say emotionally, I don't want to pay 3 grand a month or 3 grand a year when I could pay 1,000. Or emotionally, I'd love to get 60 grand back in 20 years. Yeah, let's do that instead of not getting anything. 4% a year, not great, not terrible, not great. What if you did the math though, and instead of $1,000 a year for that normal term insurance, it was 2 grand a year. Now you're talking an extra $1,000 a year for 20 years to get a total of 40 grand back, right? So in this, the numbers are different. So an extra 1,000 a year, so 20 grand will get you 40 grand after 20 years. And you might say, oh, well, that's doubling my money in 20 years. The market, in the stock market, I should be able to double my money every 7 or 8 years. So this is not a good deal. Yeah, no, you're not paying it all up front. So an internal rate of return, an average return in that scenario is over a 6% rate of return, almost 7%. And then you might say, well, investing the dollars instead of doing a return of premium, I should be able to get a better return than that. And yet, you might say, oh gosh, 6.7% or almost 7%, it's worth it for me to do that. That's where you've got to look at the math and determine, does it make sense for you to do a return of premium policy or just a regular term policy? But you'll never do the math if someone isn't creatively bringing these ideas to you. And when they're bringing these ideas to you, are they looking at this from a comprehensive financial planning perspective? I just met a financial professional who the only thing he recommends is return of premium life insurance. And that's great, right? It's an interesting tool, an interesting feature, but it doesn't fit for everyone. Sometimes the math works like it did for me, a long time ago, and sometimes it doesn't when I, just recently got a couple more policies. You've got to look at the math and you've got to work with someone who's looking at all 6 areas of your financial life, because if the $1,000 a year of term insurance, okay, great, but return of premium costs 3 grand a year, and instead you say, well, if I do that, I'm not going to be able to fund my Roth IRA and all that sort of stuff, then it probably doesn't make sense, right? Present financial position, you've got to see if this makes sense. Certainly protection planning, looking at tax planning, because if the extra dollars that you're going to pay for this return of premium term insurance could have gone to a tax shelter and improved your tax picture, that may not have made sense. The math on this, investment planning, retirement planning, estate planning, is 6 areas of your financial life need to be considered when you're making this decision. Does it make sense for you to get a return of premium term life insurance policy, or is it better for you to buy term and invest the difference? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us here as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.